Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope everybody's having a great weekend. Last week we had 3 interest rate decisions, and this week we have another 2, including FOMC on Wednesday. Now, the big thing is the dollar has been selling off, but it does not appear to be a top in the DXY. It does look like the DXY is heading back to the highs of 11450 and possibly higher. Okay, so quick look at the economic calendar as we usually do, and the first thing to note is all the PMI data that came out on Monday. Recessionary, below 50, below 50, below 50. All of this recessionary apart from the French services PMI, and basically just confirming global slowdown and the incoming global recession that we're facing. In the interest rate decision department, we had the Bank of Canada coming out, raising interest rates, but it was a dovish raise, so they raised less than expected, and they started to talk about the concerns or their concerns over contraction in economic growth because of interest rate hikes, as opposed to just being fixated on inflation. And we also saw the ECB raising rates, and we also saw the BOJ last week. But we also had advanced GDP coming out of the US positive for the first time, although don't forget this is a lagging piece of data, and very often the market does the opposite or discounts that. Although last week, especially considering we had the PCE data at the end of the week as well, the markets were fairly subdued. We saw a bounce in the dollar. However, we didn't really see much volatility from that. And that is leading me to believe this is now because of FOMC, which is coming up next week on Wednesday. So if we jump ahead to next week, you can see we have the RBA coming out on the 1st of November, which is a Tuesday. And it's important to note that we're heading into a new month. Coming into next week, we do start the new month, and I'm going to go through what I think we're going to see in the dollar into these interest rate decisions and also for the rest of the month. So keep an eye out for the RBA on Tuesday, because if you are trading the Australian pairs, you would probably be better off waiting for this to pass before getting involved with them. And they're unlikely to move leading into this piece of data. On Wednesday, we have the all-important FOMC. Now, this is really going to dominate what happens in markets next week, especially in Forex with the dollar. And I'm going to talk you through what I think we're going to see in the DXY leading into FOMC. I have 2 base case scenarios as to how I think the dollar could behave leading into this. We are expecting a rate hike, and BlackRock came out and said that they expect the Federal Reserve to strike a more dovish tone in this meeting. Well, it remains to be seen. I certainly think the Fed are getting towards that point, but don't forget they haven't got federal funds rate above core PCE inflation data, meaning that historically, whenever they fail to do that, they fail to control inflation. So perhaps the Federal Reserve are banking on this incoming global recession, which they've almost certainly induced now, to crush inflation, as opposed to ramping up rate hikes like Volcker did, because Volcker had a much less indebted system, so he could do that, whereas Jerome Powell cannot. Also on Thursday, we have an interest rate decision out of the UK, so just bear that in mind. And finally, we have non-farm payrolls on Friday. So quite a bit of data. And again, it really just points to the fact that once we get past this and we start to get into week 2, 3, 4 of November, this is when you'll start to get opportunities generally coming back into the markets a lot more, and would be a better trading condition in all likelihood. Okay, so let's look at the scorecards for the coming week. And the first thing to note is I've added 2 green lines, 2 red lines here, just to denote the levels at which these currencies actually form a bullish or a bearish bias. And you can see anything in between these levels is actually just bullish to neutral or bearish to neutral. It's essentially neutral. It's not a strong bias or even a solid bias one way or the other. So the first thing to note is that the scorecards are continuing to project corrective markets. However, with FOMC on Wednesday, this could be the catalyst to start to break this kind of sideways consolidation range in market condition that we've seen in the Forex majors. That makes it more tricky. And of course, when we come into the scorecards and we see multiple currencies above 2, multiple currencies below 2, this is when we get those really good trading opportunities. So the first thing to note is, especially heading into FOMC, may be a good idea to actually just reduce your risk, look for the best opportunities. The second thing to note is that the JPY is, for the second week in a row, the best opportunity to the short side. And since there's nothing really to the upside, what we can do is we can look at the euro and the pound currencies vis-a-vis the Japanese yen, but we can also look towards the US dollar versus the yen, and also even the Aussie, the CAD, and potentially the New Zealand as well. But we really have to look at the dollar pairs next week as news events. So wait for the news event to take place, and then looking for opportunities in the direction of those markets once the FOMC event takes place. Because remember, markets, especially the dollar, are unlikely to do very much heading into FOMC. So outside of the scorecards telling us that opportunities are drying up, we should look to restrict our trading somewhat until opportunities start to come back in abundance into the markets. Aside from that, we do also see the Canadian dollar going to -1. So again, only bearish to neutral. This is not a strong bias, but it is a signal here outside of everything else, which recently has been showing a bit of risk on. So New Zealand strengthening, pound strengthening, euro strengthening, dollar weakening. But you can see the dollar and the euro are still on the same side of the scorecards. And this is again just another sign that opportunities are drying up. But as I said, with FOMC on Wednesday, that could very well be the catalyst, and is likely going to be the catalyst to break this kind of lethargy in the Forex markets currently. Okay, so let's look at the individual currency, starting with the dollar, and this is what's likely to dictate market direction next week. The dollar is still in an overall uptrend. As it currently stands, this should just be considered an A, B, and a C, and the probabilities are still that we rally to new highs and probably onto the 115.32. But as it currently stands going into FOMC, we did have the sell-off last week, and what I think we're likely to see if we drop down to the 4-hour chart here, you can see we do have this kind of bounce in the dollar, but what I think we're going to see is either one of two things. Either we go nowhere into FOMC on Wednesday, in which case look for the market to sell off into the 109.480 like this, or we do the opposite, which is we come down, we trade into the 109.48 before FOMC, and if that happens, I would be looking for the market to bounce in the opposite direction. So those are the two outcomes that I'm looking for FOMC. But either way, what I think we're going to see here in the dollar is I think we are going to see one more move to the downside into the 109.48. This actually will bring with it some risk on, which would be, commodity currency strengthening. It would see safe haven assets selling off. So as the dollar trades into the 109.48, look for those moves to the upside in euro yen. Look for that move to the upside in pound yen. Those kind of risk on setups are likely to work quite well. And then after we trade into the 109.48, I do believe that the next rally to the upside into the highs over November and into December possibly is the next move in the dollar. So I think the dollar is going to struggle to get below 109.48. And it's going to be interesting. Keep an eye on this level heading into FOMC next week, because I think this could actually be the low of this near-term correction in the DXY over the next week or so. Next is the euro. Now, of course, just doing the opposite of what the dollar's been doing. But you can see we've just been correcting. We are still overall in a downtrend. We're below the 4-year breakout and we're below the 7-year breakout. And as it currently stands, we should just be viewing this as a correction. And look how market opportunities have dried up as this has just kind of corrected inversely with the dollar, which has just kind of gone sideways and corrected as well. So going into next week, I would not be surprised to see the euro pushing slightly higher, probably into FOMC, and then that could very well be the catalyst to send this lower down to the 0.9574. Next is the pound. Now, ever since the pound flash crashed, we've just been correcting this big sell-off here. And I would not be surprised to see it come out and take out this high. Very often you see that with flash crashes, they come all the way back up and they retest the highs or the lows. We've looked at this in previous videos with the Swiss franc crash back in 2015. Or rather, I should say, Euro Swiss franc crash. The Swiss franc itself actually appreciated. So heading into this week, I would be looking for further advances to the upside in the pound. And again, we may see the pound start to struggle once we run into FOMC, because it does look like next week we're probably going to see a near-term bounce in the dollar. And of course, this will affect not just the euro, but also pound to the downside. However, as it currently stands, the pound does look like one of the better relative opportunities heading into next week. Next is the Swiss franc. Now, the Swiss franc did bounce off the lows, and I highlighted this engulfing candle in last week's video, and I said the Swiss franc was likely to bounce, and we did get to bounce, but it still relatively underperformed the Aussie and the New Zealand last week as those markets continued to correct. I'm adding these in again this week. We're going to revisit them. It does look like we're set for further declines in those markets. So if you did want to get involved in the franc pairs, especially with a +1 score, it's not very bullish, but it's bullish to neutral, relatively better than some of the other markets. And certainly in a risk-off event, if we see the dollar rallying hard on FOMC on Wednesday, and you see risk-off coming into the markets, that would also likely catalyze Aussie franc and New Zealand franc to the downside. Next is the yen. Now, despite the intervention, I do once again believe the yen is going to continue down. And this is probably the best opportunity heading into next week. Euro yen, pound yen are my two favorite opportunities. And the yen is really the only currency that we see in the scorecards with a strong bullish or bearish bias. So I do think, even if it's tricky trading next week, the yen pairs are once again going to provide the better place to look in terms of making money next week. Any pullback in the yen then is simply viewed as an opportunity for further declines into the lows and then onto the 0.00652. Next is the CAD. Now, the CAD is in an overall downtrend, and we did get a macro sell signal -1 this week on the Canadian dollar. However, bear in mind, it's still only bearish to neutral, so it's not a very strong sell signal. It's just that there isn't really anything else going on in the scorecards outside of those yen weak signals. So any continued pullback in this market, and if the DXY is going to come down and it's going to retest those lows as discussed, potentially into FOMC, I would not be surprised to see the Canadian dollar pushing higher. Same with the Aussie, New Zealand, all of these commodity currencies as the dollar trades into the lows. But that is when I would be looking for these markets start to reverse down to the lows and onto the 0.7088. Aussie dollar, again, we are correcting, and I am looking for new lows and a move to the 0.61240. So as the DXY pushes a bit lower, as I suspect it will next week, I would not be surprised if we see the Aussie coming and taking out the highs. And that is where I'll start to look further declines into the lows and onto the 0.6124. And last but not least, the New Zealand dollar. Very similar setup to what we're looking at in the Aussie, the Canadian, all of these commodity currencies. They're just correcting higher. There's no real momentum. This is momentum. This is momentum. This is momentum. This is momentum to the downside. And you can see this is not really momentum here. This is just correction. This is corrective. So again, as the dollar sells off into that key area of support highlighted, I would not be surprised to see this pushing a bit higher. But coming into FOMC, don't be surprised to see this start to reverse down to the lows and onto the 0.5466. Whether this happens before FOMC or just after remains to be seen. But I do believe this is the next move down in the New Zealand dollar. Okay, so let's look at the markets themselves, starting with crude oil. Now, I did tell you a few videos back, crude oil has moved into the neutral part of the commodity scorecards, and it doesn't look like a fantastic opportunity. I still don't think it's a fantastic opportunity. I haven't been trading crude oil, but I do think we come up and test the highs over here of the 93.75. So if you are trading crude oil, any pullback next week, and you can see this would actually sit right at this trend line if you were to draw this on. Any pullback in crude oil would be viewed as an opportunity to look for longs into the 93.75. Next is euro yen. Now, euro yen has been very, very volatile here because of the BOJ intervention. However, you can see pretty much like over here, we had the intervention, we came down a bit, and then we started to reverse. And we are seeing the same here, and we've just kind of started to move sideways. If you look over here at these highs, we're right here. There's kind of a consolidation here. So any pullback in euro yen next week is viewed as an opportunity to look for longs into the 149.77. Next is pound yen. Now take what we just looked at in euro yen, where we said euro yen was kind of consolidating after the intervention, and look what's happened in pound yen. You could look at this almost as the future potentially of euro yen, starting to break out of that consolidation and making its way higher. So any pullback in this market next week is viewed as an opportunity to look for longs into the 174.86. Now, very often when you have the dollar, which is kind of ranging or correcting, or you have a big news event, you can split the week into two parts. You have risk on, which is where commodity currencies, risky assets, equities, for example, commodities tend to do well and rally, and risk off, where safe haven assets tend to do well and rally, like the dollar, like the yen, like the franc, and you tend to see commodities selling off, you tend to see equities selling off. So what you'll find is these first three markets are all risk on, and you would expect these to do especially well if we start to see the dollar selling off into the lows next week. Once we get FOMC, however, if you have the dollar rallying based on what's said on FOMC and you start to see risk off, because if the dollar rallies, you're probably going to see equities sell off, and you're also likely going to see commodities sell off because they're priced in dollars. So going into the start of the week, those three risk-on currencies should do well if the dollar starts to roll over. But if you get that rally in the dollar on FOMC and you start to see risk off coming in, you could look to pivot towards some of these dollar plays down here. And also Aussie franc and New Zealand franc to the downside are also risk off setups. So you can split these markets into two. Oil to the upside, euro yen to the upside, pound yen to the upside, risk on. But if you get a reversal on FOMC, start to look at either the dollar pairs, Aussie franc to the downside, New Zealand franc to the downside, or even EurCad, pound CAD to the upside, because they are all risk off currency pairs. Next are the CAD pairs, now not highlighted in gold because the yen pairs are the only ones giving us a strong sell signal, whereas the CAD pairs are just a kind of weak sell signal. It's -1 bearish to neutral. However, any pullback in this market is viewed as an opportunity to look for bullish breakouts up to the 1.3715. Next is pound CAD. You can see we're trending to the upside. What I would like to see is, because we don't really have any momentum, we're just kind of testing the highs. Any correction like this is going to be a good opportunity, perhaps even into FOMC, to start to look for bullish breakouts. And if we start to break higher, I'm going to be looking up towards the 1.5955. And always remember, guys, we're looking at a number of opportunities here, but you only really need to catch 1 or 2 good trades in a week in order to do well. You do not have to catch every single move. Okay, so moving on to the dollar pairs, and they're highlighted in blue because of that FOMC. So these are news event trades next week. And what I think we're going to see next week is very often you see markets correct into news events, especially interest rate decisions, and then start to move. What I'm looking for then next week is if we can start to pull back in Aussie dollar, retest the highs, and possibly even test the 65400. If we start to do that into FOMC and at the same time the dollar sells off into its lows, I'm going to be looking for potential reversal in these markets, dollar strength to come in. And if that happens, if we start to see the bounce, I'm going to be looking to trade the follow through. So any pullback after that, down to the previous lows and onto the 0.6124. Next is New Zealand dollar. Again, I would not really be interested in buying New Zealand dollar. Even if we start to see the dollar selling off on FOMC, I'd rather pivot to some better risk on currencies or markets which are in the direction of the trend, i.e. euro yen to the upside would benefit from a weaker dollar. Pound yen would benefit to the upside from a weaker dollar. You would see Bitcoin benefiting to the upside, and this is a market we're going to look at in the event that the dollar does sell off on FOMC. But my base case is for a new high to be made, just as we looked at in the commodity currencies in and of themselves. And then I'm going to look for this to potentially double top like this on FOMC. And once we get the sell-off, any pullback is viewed as an opportunity to trade the follow-through down to the lows and onto the 0.5469. US dollar CAD, testing the low of the 1.3503. I do think we come down, probably retest this again into FOMC, and I'm going to be looking for this to bounce on FOMC. Any pullback like this after that is going to be viewed as a breakout and the start of the next leg up into the 1.3970. It's unlikely to do some of these moves all in 1 week, but over the next couple of weeks, certainly next month, I'll be looking at this move into the highs in US dollar CAD. Next is the euro. Again, I do think the euro probably comes up for one more high, and this forms a big A, B, C. We are below the major 7-year breakout. And I'm looking for this to correct into the highs in FOMC. And if we start to reverse on FOMC, we get a bigger sell-off because the market just discounts. Maybe we do get a more dovish Fed, but the market just discounts it because you've already got BlackRock, for example, coming out and telling everyone. So it's very well known, and the market does the opposite as what people expect. This happens all the time. So if the market discounts this and you get a big rally in the dollar after potentially making a new double top, let's say, any pullback in this market from Wednesday onwards is going to be viewed as an opportunity to look for shorts into the lows and onto the 0.9413. I have been saying all year the dollar has not topped. We should be expecting high highs, and I am once again beating the table on that and saying yes, the highest probability play, even if we come up a bit higher in the short term, the highest probability is that we're coming back down to the lows in euro dollar. And the final dollar pair here we're looking at is US dollar yen. Now, all of these are based on US dollar strength. So any pullback in this market, if we come down, maybe test the lows once again, and then reverse on FOMC, we get some dollar strength coming in. That's going to be the opportunity to look further advances back to the 151.64. So I reiterate, all of these are based on strength from FOMC in the dollar. And if we do not get that, then this should boost Euro yen, pound yen further still, crude oil to the upside, and even Bitcoin to the upside of my 4 risk on markets that I'm looking at next week if we get dollar weakness from FOMC. And finally, we're going to look at the franc pairs. Now, Aussie franc to the downside, New Zealand franc to the downside are risk off plays because they are commodity currencies underperforming a safe haven asset like the Swiss franc. So just as when the dollar sold off, we saw Aussie franc and New Zealand franc correcting a little bit higher, so too, if the dollar bottoms and bounces on FOMC, you should expect these to break lower like this as well. So if we get that risk off, if we get the dollar rally on FOMC, look for these to break lower, and then any pullback is viewed as the opportunity to look for shorts into the 0.6208. And the final Forex pair here we're looking at is New Zealand franc. Now look at this zoomed out a bit because this move here is what is currently being corrected. This is just simply a bigger correction of this down move. And because this was such a big down move, we're having a much larger correction. However, if we get on FOMC the dollar bouncing from the lows, and in fact, comes down like this we're looking at in the dollar, and then we get that double bottom, we get the rally, because the market discounts, for example, a slightly more dovish Fed, then you should expect Aussie franc, New Zealand franc to sell off as well, just as the opposite of what happened. They started to correct higher when the dollar sold off. So any rally in the dollar next week from FOMC, look for a sell-off in these markets, and then any pullback is the opportunity to look for shorts into the previous low at 0.5512. Okay, so wrapping up with gold, silver, and Bitcoin. Starting with the gold-silver ratio, we are moving sideways, consolidating in the gold-silver ratio. So I do not favor gold over silver or silver over gold as it currently stands, either to the long side or the short side. I have no bias outright on one of these over the other. Next is gold. Now, out of gold and silver, I do have a bearish bias on these markets because I do not believe we've seen the top just yet in the DXY. And any pullback next week, especially if we retest the 1676.86, which is the major breakout level highlighted in previous videos, I would be looking for potentially after FOMC or on FOMC, if the dollar rallies, for these markets to sell off, back down to their lows first and foremost, and then onto the 1575.72. Again, if you get a sell-off from FOMC in the dollar, then obviously you'll probably see gold spike higher, and this would not be a short. So really, this is again one of those news events almost where you want to see the dollar rallying off FOMC in order to get involved with this to the downside. Next is silver, and exactly the same applies to silver. If we continue to pull back in silver and then we get a rally in the dollar from FOMC, you should see silver breaking down like this, and that would be your opportunity to come and have a look to see if you can find good opportunities to the downside, down to the lows first and foremost in silver, and then onto the 16.96. Again, if you get a sell-off in the dollar on FOMC, this is not going to be a good short next week. And last but not least, we have Bitcoin. Now, Bitcoin did break higher, and it does look like Bitcoin could be coming to the 22.6620. So this is risk on. If Bitcoin is going to go higher, this is risk on. And what this means is it sets us up quite nicely with these three markets to trade FOMC potentially in two ways, depending on what happens. If you get dollar strength from FOMC, I would favor gold and silver to the downside. If you get dollar weakness and you see risk on coming in, this is likely to lift risk assets, including equities, including commodities, and also Bitcoin. And so in that scenario, if you get a sell-off in the dollar from FOMC, you can be reactive as opposed to being predictive, and come and have a look for Bitcoin to break higher. And I will be looking up towards the next key of resistance of the 22,666.20. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. If you enjoyed today's video, why not consider joining us during the week where I share my charts as well as the setups that I'm personally looking at trading with members on a daily basis. And we also publish the scorecards for over 75 markets in different asset classes, including Forex, stocks, bonds, and commodities. You can find out more about the benefits of GMT membership by clicking the links in the description below and also in the pinned comment below. So thanks for watching. The only thing left to say is take care, and don't forget to trade safely.